So today I want to talk about credit cards. When I stand in line at a cash and I see people in front of me paying with cash or Interac, it really bothers me. I don't understand why people still pay with cash or Interac. And I'm talking about those who have a good enough credit to get a credit card. There are so many benefits paying for things with a credit card as opposed to just paying with cash or debit or Interac. First of all, the cash back, of course, the points. You can actually get cash back by making purchases, everyday purchases you would normally make on your credit card. You can get cash back for them. And depending on the credit card out there, you can get at least 1% cash back. So imagine you spend $2,000 a month on gas, insurance, bills, telephone bills, internet bills, groceries, restaurants, almost any place that accepts credit cards. Let's say you're spending $2,000 a month on those things. Well, if you've got a credit card that gives you 1% cash back, that's $20 a month. And if you use your credit card to pay for a vacation, you're also getting cash back on that. So it adds up really quickly. Some credit cards give you 2%. It all depends on how much you spend. You could get a credit card with an annual fee that gives you between 2 and 4% cash back, so it might be worth it depending on your annual spend. But you can easily get a 1% cash back card with no annual fee. That's the minimum. Some cards can offer you 2% cash back, but on certain categories like groceries, gas, recurring bills, for example, or restaurants, and you can get that with no annual fee. When you pay with cash or Interac, you're paying directly with money that's in your bank account. You're not getting anything, you're not getting points or cash back from it. Not only that, when you pay with a credit card, you have almost or even sometimes more than 30 days to pay that balance. So you make all your purchases on a credit card in a month, and then when you get your credit card bill, the cash that's in your bank account that you didn't use to pay for these things, you use that cash to pay your credit card bill so you don't leave a balance, so you don't pay interest. So all you did was collect points on your everyday purchases while paying no interest because you paid your credit card in full with the cash that was in your bank account because you didn't use that cash to pay for things up front or to pay for things with cash or with Interac. So I understand some people might say, oh, when I pay with a credit card, I don't see or feel how much I've spent. So I end up using the limit on my credit card and I end up spending more and also spending the cash that I have at hand. So I end up spending more than I should when I use a credit card. I don't think that's a good enough reason to not use a credit card. I mean, there's many ways to keep track of your expenses when it's on a credit card. Most credit card companies have apps right now, so you get notifications every time there's a transaction on your credit card. So if you're the type of person that spends just because money is available, then yeah, probably a credit card shouldn't be for you, although you can change that habit. But if you're the type of person that only buys the necessities anyways, whether the cash is available or not, then you shouldn't worry about overspending just because you're using a credit card. And what's great is that at the end of the month, everything is on a statement, and you get to, depending on the credit card companies, you get to, depending on the interface that they offer on their website, you get to filter or sort by category so you can see how much you spend in each category. So if you need to cut back in certain categories, you're able to see which categories need your attention. So another thing I don't like about Interac is when you pay with Interac, you're using a transaction from your bank account, and usually that comes with fees. And to avoid those fees, you'll need to take a monthly package, which is usually like $10 to $30 a month. And if you want to avoid those $10 to $30 a month, you need to leave a balance in your account. So all these things is wasted money because you can avoid these fees easily by not making these transactions. By only making one payment a month by paying your credit card bill, you can get cash back from all your expenses just by using your credit card. And the balance that you're forced to leave in your bank account, that's not gaining any interest for you or not doing anything for you, you can invest it. The only reason I'd use cash to pay for things is if I'm getting a discount for paying with cash, a discount that is higher than the cash back rate I'm getting with my credit card. So if the store is offering me a 5% discount for paying cash instead of credit card, then I'll pay in cash for sure because my credit card only gives me 2% max cash back. So in that case, I'll pay cash. Or if some restaurants will say no taxes if you pay cash, in that case I'm saving 15%. So then for sure paying cash is definitely worth it. But if it's going to cost you the same thing to pay cash or credit card, then you should definitely use the credit card so you can get the points. And once you get your credit card bill, the cash that you didn't use to pay for that item,
it should be sitting in your bank account still. You use that cash to pay off your credit card bill. Now, I hold several credit cards. Some I've had for a very long time, and I just don't want to cancel them because sometimes I get promotional offers like 0% interest rate for 12 months. And sometimes, for example, I have a Capital One cashback card that gives me 1.5% cashback on everything, no exclusions and no caps. So 1.5% cashback on everything and no annual fee. But that card doesn't exist anymore. So if I cancel it, then I lose that feature. Right now, they only offer 1% cashback. So it's still not a bad card because it's no annual fee and it's 1% cashback on everything. So that should be your minimum. You should not have a card that gives you less than 1% cashback. And you shouldn't be paying for a card. No, you shouldn't be paying an annual fee on a credit card that gives you 1% cashback because the alternative is available. What's great about Capital One is their customer service and their website, their interface. The cashback you can redeem at any time. You don't have it. It's not redeemable at certain intervals. You can redeem it at $5, at $7, at $50. It's really up to you. You can get a credit on your statement or you can get a check mailed to you. And it's all done online, very, very easy. Credit card that I would recommend is a Capital One Aspire Cashback. It gives you 1%. The one I have gives me 1.5, but it doesn't exist anymore, unfortunately. But it's still a decent card with 1% cashback. The Tangerine is also a good credit card. It gives 2% cashback on 3 categories of your choice, and then it gives you 0.5% on everything else. Pretty sure it used to give 1% on everything else, but that changed, and they dropped it to 0.5% on everything else. So you get 2% on 3 categories of your choice. It could be restaurants, groceries, gas, entertainment, recurring bills, pharmacy. So you get to choose the categories and you can change the categories every month. And in order to get 3 categories of your choice, the cashback needs to be deposited in a Tangerine savings account. So basically they require you to open a Tangerine savings account, which shouldn't be a problem because it's free anyways. So that's why I don't understand people who pay bank fees $30 a month or keep a balance in order to avoid paying $30 a month when you can open a Tangerine bank account for absolutely free without leaving a minimum balance. And your transactions are free too. So another card I have that I like is the Amex Cashback also card. This is a cool card, transparent. Whenever I use it, someone has to comment always. So what I like about this card is the look, of course, and the fact that it gives me 1.25% cashback on all my purchases. Also, no restrictions, no categories required. The cashback on the Amex is paid once a year. So it accumulates throughout the year and they pay it in September as a credit statement on your account. They also have good promotional offers. For example, they have like 3% interest rate for 12 months if you want to do a balance transfer. And also for new cardholders, there's a $50 credit as soon as you make your first purchase. And they also give 2.5% cash back for the first 3 months instead of just 1.25. Another card I have is the MBNA Smart Cash. This one gives 2% cash back on gas and groceries and then 1% on everything else. So all these cards have no annual fees. That's what I like about them. And I'm able to get 2% cash back without paying an annual fee. Obviously not on all categories, but I can mix and match them to make sure I cover as much categories as I want. But definitely if I had to choose one card only, it would be the Capital One Aspire Cashback, which gives me 1.5% cashback on everything. So it's the perfect medium the perfect average between all the cards, because I don't have to think which card to use every time I'm buying something. Oh, this is gas, so I should use the card that gives me 2%, take out my 2% card. At least with the Capital One, I'm getting 1.5% all the time, even if I'm not getting 2% on gas, but another card gives me 1%, Capital One's going to give me 1.5%. So that would be the card that I would choose if I only had to choose one card. And if I'm a big spender, so if I spend like over $3,000 a month on credit cards, I would get the MBNA rewards card, which gives 2% cash back on everything, but it has an $89 annual fee. That would be the card I would get if I spend a lot. Also, Scotiabank Visa Infinite Momentum card is also a pretty good one. Gives up to 4% cash back on the gas and groceries category
but it comes with an annual fee of $100. So depending on your spend, a card with annual fee might be worth it. But otherwise, I think $2,000 or lower, it's best to go with a no annual fee card. And the best one out there right now, in my opinion, would be the Amex at 1.25% on everything. But the problem with Amex is that it's not available, it's not accepted everywhere. So if you get an Amex, you need to have another card. So the other card I would recommend is the Tangerine card, MasterCard Tangerine, because it gives you 2% on 3 categories of your choice, and you can choose the 3 categories in which you spend the most in per month. So you can get close to 2% per month cash back. So I'll have links in the description below the video with all these cards. And also, if you want to open an account, a bank account with Tangerine, you can get $50 just for using my referral code, and you get an extra $100 if you transfer your payroll to Tangerine for 3 months. You'll get an extra $100. And after 3 months, you can either switch back or you can leave it with Tangerine. It's up to you. So what's great about Tangerine is they have a savings account, and they always have promotions where they offer 2.5% interest in their savings account. So instead of having your money, a minimum balance left at a CIBC or an RBC just to avoid paying $30 a month, that balance, you can leave it in a savings account that gives you 2.5% interest per year if you don't want to invest it in the stock market. So a great website to compare credit cards is ratehub.ca. I'll provide a link below also. So simply click on the credit cards category, and you tell them what kind of rewards you want, or what are you looking for in a card exactly. You want rewards, low interest, balance transfer, or secured. So if you want cash back, it'll be rewards. Annual fee, let's start with none. And credit score, not sure. Then find my credit card. Sometimes you'll have sponsored cards, or they're going to show up first. Otherwise, it's going to sort it in cash back in the first year. But also sometimes they have promotion. Some credit cards have promotion for the first year. So that amount that you see here in cash back includes the promotion. So you need to look at the little number at the bottom here, which is the cash back after the first year. So you've got the first one. This is a sponsored link, so it's the BMO Cashback MasterCard. It has no annual fee, so that's good. And on $1,500 a month spend, you'd get, so I'm gonna ignore the $273 because obviously it includes a promotion, but you get $180 per year on $1,500. So it's a little bit over 1%. No, actually, so it's that would be 1% exactly. So we got the MBNA Rewards Platinum Plus MasterCard. That one would give you $276 per year on $1,500 per month spend. So this one, if you check it out, so it gives you 2% on gas, groceries, and restaurants, and gives you 1% on everything else. So that's a pretty good one actually. So it's similar to the Visa MBNA that I have right now, Visa Smart Cash, except my 2% doesn't include restaurants. This one does. So this is actually better. This one has gas, groceries, and restaurants, 2%, and 1% on everything else. It's got a cap though of $5,000 annual in each category. So after you spend $5,000 in each category per year, you're gonna be getting 1% on these categories. So you've got the Blue Sky credit card, but the Simply Cash is better because it's cash back instead of travel points. It's easier to redeem. So the Amex card would give you $225 on the same amount of spend at the end of the year. You've got the Smart Cash Platinum Plus, that would give you $147. So based on this information, I would recommend the MBNA Rewards Platinum Plus MasterCard because it will give you $276 cash back. Or the Amex also is pretty good because it's 1.25% on everything. But the MBNA Rewards Platinum Plus, it's 2% on gas, groceries, and restaurants, and then 1% on everything else. So obviously it depends on your categories of spend. So you can play around with this to see which card is best for you, but the minimum that you should accept is 1% cash back, and you can get that with no annual fee. You should definitely avoid the annual fee because you don't have to, because there's so many credit cards that can give you almost 2% cash back without paying an annual fee. So that's what I wanted to talk about today.